traders, this is Blake Morrow with ForexAnalytix, and good Sunday to you. Hope everybody's having a great weekend. Wow, we have a lot to talk about. We do, and so I've got so much to talk about. But before I do that, let me just say this webinar is sponsored by ForexAnalytix. So if you haven't tried us, make sure you do so. It's only $1 for 10 days. Give it a whirl. You can choose the premium or the light version, but when you're using ForexAnalytix, at least trying it out, you're going to get the premium version. Make sure you download the mobile app, so this way you have all of our analysis right at your fingertips. You get all the patterns in play and the support and resistance level breaches, all the updates just right to the palm of your hand. All right, let's talk about what happened this week. This week was a very, very busy week with price action, and it's probably going to be a very risky or a volatile week next week, but that brings on more risk. And I think one of the things I wanted to make sure I talk to you guys about today, before I actually get started on the analysis of what we're looking at, is volatility is high. Volatility is running high, and I know I've mentioned this in our daily free webinars that we do. That's open to you guys. The F.A.C.E webinars talked a lot about volatility, and because of the heightened volatility, this is the time where you can. It's easier to make money because we're in a higher period of volatility, but also you can put yourself in a precarious situation if you are in a losing trade. So make sure you trade accordingly, size-wise. Trade smaller positions. Don't let positions get away from you. Cut your losses short as quick as you can. You'll have plenty of opportunities to make money when a trade goes in your favor. I just want to really accentuate the risk that is associated with higher periods of volatility. Like I said, there's more opportunities to make money, but there's more opportunities to lose money as well if you're not careful. So take on some smaller positions. So I think before we even talk about currencies, we got to talk about the elephant in the room, which is obviously the S&P. And I want to show you this chart because this is the CFD for the S&P, which is very similar to the futures contract. And the reason why I use this from F.A.C.E is the data feed provider for this is because it shows us what's happening in European trade and the spike highs or lows that we'll see in overnight. It's very similar to a futures contract, but the good news is that I get so much historical data here that it really helps for me have a better view than just looking at the S&P index that opens and closes during New York trading hours. Although that is something I will look at from a candlestick perspective, day in and day out. But what I wanted to point out to you is this technical pattern, which is a pennant. It's a bearish pennant, and if you look at the pennant where it's pointing, it actually points to the long-term uptrend line near 2,500. Okay. Now you're probably thinking, well, Blake, we're at we're almost at 3,000. So you're saying that we're going to 2,500. I think actually eventually we're going to go revisit this long-term trend line. And I guess the comment I would make is, why wouldn't we? Because this is a trend line that we've tested multiple occasions over the last 10 years. So why wouldn't we see 2,500 again? The real question to me is, can we go lower than that? And I start looking at weekly charts and saying, because I'll just give you an example. I was talking to a friend of mine a very good friend of mine that doesn't know the markets at all, but he was a little worried about the political environment, at the beginning of this year. And I said, if you're not comfortable, there's nothing wrong with moving. You've made great money in the markets in his retirement accounts, and they have a sizable amount too. I'm like, there's no reason not to lock in profits if you're feeling uncomfortable about the situation. And he did. And at the beginning of the year, he took basically his money out of the market, and he's like, well, my plan is I want to I want to buy the stock market when the S&P is around 2,500 or 2,200. I'm like, great plan, that's fine. And I was actually looking at the charts, not with him, but after having this conversation, revisiting this conversation with him, and I was thinking to myself, could we really go below that longer term trend line that comes in at 2,500? And the answer to those questions, obviously I can't predict that, but I think more of it has to do with the political environment versus the coronavirus. I think the coronavirus or COVID-19 is gonna run its course, hopefully sooner rather than later. But what could change is politically. It depends how the U.S. voter views the Trump administration and their handling of this situation going into the election season. Whether it's Joe Biden or Mike Bloomberg or Bernie Sanders on the ticket doesn't really matter. What matters most is, will Trump win or not? And the fact of the matter is I think if he loses, the risk of us seeing much lower levels into the end of this year, below 2,500 and back towards like 1,700, I think is a realistic expectation that we end up unwinding everything that we've gotten out of the Trump administration if he is not elected. So again, those are things that I can't predict, but I want to just show you technically that I don't think this is out of the question. Should we, somewhere in this neighborhood, should Donald Trump lose the election in November? So those are things that I actually wanted to talk about really quick, just because it's fresh on my mind. But what's really fresh on my mind is this pennant formation that you see here in the markets. And let me adjust this. So when you're talking about the S&P, we actually bounced there at the end of the day on Friday. Panic is starting to set in regarding the virus around the United States. We're seeing, obviously, cases, unfortunately, are cropping up all over the place. New York governor declared a state of emergency, and that's more for funding reasons. But panic is starting to set in. You're starting to see it in grocery stores, and people are talking about it more. So my gut instinct would be that risk appetite's going to come under assault probably the beginning of the week. And I want to highlight this area. This is and let me just do this. This is a 161% extension of this last move, comes in right around this 2,800 or 2,880, excuse me. That's also the longer term 88%, which we've respected. I'm interested to see how price reacts down here around this 2,880 level. The reason why I'm not 100% convinced that the equity markets break down just yet, which I think we eventually will, is that sentiment is extremely bearish, and it's a little almost panic stricken. So I think that the market may have to take a breath and maybe bounce around like this, before we eventually break down in the coming week or two. That's what I think. But let me also stop and say this: below these lows that we set a week or two ago, all bets are off, and that's when we start really targeting sub 2,600 level. I'm hoping we catch our breath a little bit and bounce. Like I said, sentiment is very extreme. I think there is a lot of panic out there, so I'm a little skeptical about getting short risk. Now, when I talk about getting short risk, that doesn't necessarily mean, oh, Blake's trading the S&P. No, I try to trade currencies based on what I see here is one of my correlations that I will follow, guiding me what to do in the FX market and one of the reasons, actually, most of you guys know this, but I'll reiterate, one of the reasons why I've been so bullish the euro over the course of the last couple of weeks and have been playing it on the long side is because I have been warning you guys for months on this webinar and every day on the daily webinars that when stocks come under pressure, the euro dollar is going to rise in value. It's not going to sell off. A lot of people have this false belief, at least for now, that the dollar is a safe haven currency. I've always believed that the dollar is a safe haven currency. It just is at a certain point. And because of the what's happened over the last couple of years, using the dollar as the predominant, or using the euro as the predominant carry currency, because when the U.S. had rates at almost 2%, and the ECB's at 0, well, you deploy euros into other things like dollars, to make a buck on the spread on rates. I mean, the carry interest was very beneficial by shorting euros. Now all that's unwinding. So I've been warning you guys about that, and I've often said I don't know where the euro is going to go, but it wouldn't surprise me if we go into the teens. Do I think that Europe has issues? Yes, I do. Do I think that euro is a long-term buy? No, I don't. Do I think the euro can get back up to 115 to 120 before we turn lower again? I do. And so I don't know how far this is going to go in the euro, because we are at the 127% extension of the last down move. But even 161% extension takes us to 115. I think that's within reach. Could you look for an area up around 115 to be on the short side of the euro? Sure. I think you have to take into account what's happening in other markets too, whether you're looking at the S&P or whether you're looking at the gold market or what's happening in crude, which we're going to talk about crude and gold here momentarily. But I did want to show you a couple currencies, because the euro you have to also keep in mind the euro closed in breakout territory, right? Above 112.30 is breakout territory. So dips are going to be bought, around the 112 level, in my opinion. You look at the cable, we've had a reversal out of a descending wedge. If you were listening to the webinar on Thursday and Friday, our F.A.C.E webinar that's free. Remember, if you guys can't, or if you guys don't normally listen in, our link is going to be in the description on the YouTube video if you're watching us via YouTube. So just click on that link and register so you can listen to that a couple times a day, every day, or at least the F.A.C.E webinars once, and then I do a daily roundup, which is a 10-minute webinar a couple hours later, 4 hours later actually. So, but look at the cable. The cable's come out of a descending wedge, which is bullish. So reaching for the 132 level would be very logical at this point. It is a 618 retracement. It's 161% extension of the last down move. So 132 seems, where we're going. We're at 130.50, and we closed in breakout territory. So that's something to think about. A lot of you are like, well, I want to sell the Aussie then, or I'm thinking about selling the Aussie because we're in a low risk or low growth environment, which totally makes sense. But technically, I think that we have an inverted head and shoulder pattern here in the Aussie dollar. So let's talk about this for a moment. And as far as Australia goes, this is going to be mostly risk on, risk off type of moves. But I think that this is possible. Sorry about that. That was my phone. We have an inverted head and shoulder pattern here in the Aussie, which is a 38% retracement. So if you think about this, the Aussie, before we could turn lower again, we may have to go, right back to 68.50 roughly, maybe somewhere around here, to the sell zone up here before we can turn lower again. And I think that's doable. Again, if you look at the euro, look where the euro's going, you look where the cable might be going, look where the Aussie's going. Okay, I think all that's doable. I think you can sell the Aussie at higher prices. Getting a short Aussie dollar in this environment at the 68.50 to 69 cent level, I think is going to be a gift from the Forex gods. Some of you might remember I used to joke around with the FX god, so I'll just think about that for a moment, let that set in. But yeah, break above this 6660, I think is going to be, it's going to provoke a squeeze. Let's talk about the yen, and then I'm going to talk about gold, and then I'll let you guys go. So the yen, massive, obviously massive reversal here, and I think that the dollar yen goes lower before it goes higher. We closed in breakdown territory. I've been warning you guys for the last week. The false breakout is going to lead to a breakdown. I actually think that the dollar yen is probably heading back down to 100 before we bounce. Is it going to do it in one fell swoop? No. I'm a little skeptical actually about trading the dollar yen at these levels on the short side, unless the stock market actually does a full-on breakdown. But one of the things that you have to be watching if you're trading the dollar yen is you've got to be watching the 10-year bond market. I warned you guys earlier this week that I think yields are going lower before they go higher, and we're continuing to stretch our legs here as the 10-year bond market breaks out. Yields are going down. So while yields are going down, it's going to be very tough for the dollar yen to bounce, right? But I do think that we might be close to a high in the bond market near term. Longer term, we'll see. I think that's more based on global developments. But you can see I actually drew this out a couple of days ago when we were live on the webinar, when we were down here. Whoops, excuse me. We were down at these levels, saying that I think we're going to, rally higher before we turn lower. So, and then last but not least, I want to talk about gold. Gold is reaching higher. The pennant points to roughly 1730. That is a 78% retracement of this entire move. I think we get here first before pulling back, but gold is going to be one of those assets that in this environment, traders are really or investors are really looking for. So I think gold is a buy on dips, not a sell on rallies. I mean, you might be able to take some profits here, but I think that buying it lower is what you're going to see from the market in the weeks and months ahead. So whether that's at 1600 or back at 1550, I think that you actually want to be a buyer of gold on dips if you can, as long as the virus stays relevant in today's news. Okay, and even as the virus hopefully dies down, in the weeks and months ahead, the scar that's going to leave on global growth is going to provoke traders and investors to be long gold on dips. I think people want to own gold in this environment, especially with all the uncertainties that we're faced. And just remember, guys, with the analysis I just gave you, you're going to be able to get live updates as it's happening on these 30 instruments that you see here throughout the course of the day. So make sure you sign up for ForexAnalytix so you have these updates and the analysis in front of you. Throughout the course of the session, you can see all the updates that we did. Just this is Friday and Thursday and Friday, but and that's you got harmonic updates and Elliott wave updates and candlestick updates and macro updates. This analysis comes flying at you throughout the course of the day, which will keep you abreast of what's happening in the markets. Before I go, I do have to mention that this week we have the ECB meeting. That's going to be the main event for this week, and that happens Thursday morning. We also have CPI in the US on Wednesday, but all eyes are going to be on the ECB, and the question is, what can they do? They're going to have to, if they're going to respond to the slowdown that we're seeing globally. What type of monetary action does Christine Lagarde and the ECB have? And there's a lot of speculation that they're going to tweak LTRO or something of that nature. But I think the fact of the matter is, the ECB is going to be a little bit reliant on some fiscal response from some of the bigger Eurozone countries moving forward. So I think the euro Thursday will be very telling for what we're going to do with the euro as it's reaching up towards these prices. When you're talking about into the teens, what are we going to do here is probably going to be more of a reaction to the ECB's the ECB's action on Thursday. So guys and gals, if you're watching us via YouTube and you think this video is going to be beneficial for you going into next week, please give us a thumbs up, subscribe to our channel, so this way you get all of our live videos and our great interviews that Dale Pinkert does throughout the course of the week. You get those on your YouTube feed. Click the bell icon if you want to be notified on your mobile device or on your desktop when we do push out new videos. We try to get them in the can and processed within about 3 or 4 hours after filming. So in case you missed the video or one of our webinars live, you can go back and watch it in a fairly timely manner. Like I said, it takes our team a little bit of time to capture it, process it, upload it, put all the tags and everything else. And remember, if you don't listen to the F.A.C.E webinar on a daily basis, look down below in the description. You'll find a link to the F.A.C.E webinar so you can register and listen in. So guys and gals, good luck. And remember, with ForexAnalytix, at least, in this high period of volatility, having somebody to help you, guide you through some of this volatility is really important. So that's why I think you should at least try us out. So have a great remainder of your weekend. I will see you tomorrow morning on the F.A.C.E webinar. My name is Blake Morrow with ForexAnalytix. Have a great day.